Hi, Cary McCaslin here with TriStar Home Loans, coming to you today with another video. Today we're going to be talking about 5 common mortgage terms that maybe you've heard but you didn't quite understand. But before we get started, please check out when you have time, check out my Instagram page or our TriStar Home Loans Facebook page so we can stay connected. Number 1 is escrow. This is one that I get a lot of questions on, and it's funny because it's used, the word escrow in a mortgage transaction or a real estate transaction is used in multiple ways. Escrow can be defined as the company that is the neutral part of the transaction that handles all the transferring of funds. Okay, so truly escrow is a company, an escrow company. Escrow can also be used as a way of saying that you're in a real estate transaction, whether it be buying a home or even a refinance. You could truly say you're in escrow. So some people utilize it that way. A third way I can think of where the word escrow is used is a lot of people referred to escrows as having your impounds, meaning your property taxes and your insurance included in your mortgage payment. Many people refer to that as escrows. So escrow is a tough one. It's used in multiple ways in a transaction. The next one is underwriting. I utilize this term a lot when I talk to clients, and I feel like a lot of them maybe don't know what I'm talking about. Underwriting is truly the department at a mortgage lender that reviews the full file for loan approval. So underwriters are licensed individuals in the underwriting department that take the loan file that we've packaged and have sent to them, and they review the income, assets, and the credit and compare that to loan guidelines that you have to adhere to for loan approval. So that's what underwriting is. We're essentially waiting for underwriting or the underwriter to give us a loan approval. Number 3 would be debt to income ratio, which we refer to as DTI. This is really important when qualifying a home loan, whether it be a refinance or a purchase. So DTI, or debt to income ratio, is truly the ratio of your debts, which actually show up on your mortgage credit report, which will be your monthly payments. You add that to the proposed mortgage payment, including taxes and insurance, and you take that number in ratio to your gross monthly income. Then you come up with a percentage, and Fannie Mae, Freddie Mac, VA, and FHA have their own guidelines on how much that number can go up to for you to still receive a loan approval. So debt to income ratio, really important. Okay, our next one is LTV, or loan to value. So what this is, it is the loan amount, so the amount that you're borrowing in relation to the value of your home. So it's very important when determining the risk on the loan. So the higher loan to value, the more risk a bank thinks your loan may be. The lower loan to value means that you have more equity in your home, so less risk to the bank that's lending you money. So again, high LTV, more risk; low LTV, less risk. High LTV, typically a higher rate; lower LTV, typically a lower rate. Okay, lastly, there's PMI or MIP, which are essentially the same concept. PMI is private mortgage insurance. This would be on conventional loans when you have less than 20% equity. MIP is on FHA loans, and that's mortgage insurance premium, also an insurance policy just like PMI that protects the lender. It doesn't really protect you as a consumer or a borrower. So we talk a lot about these things because eventually people want to get rid of these on their home loans. So you can do that in a couple ways. On conventional loans, you can either wait until you've made enough payments to where you've built up at least 20% equity, and then a lot of times that would just fall off of your payment, the PMI. Or you can refinance, and if there's enough equity at that time, you can have no PMI. MIP on FHA is most of the time life of loan, and you would have to refinance to get out of that. So that's a question I get a lot. If you ever want to talk about how to get rid of PMI or MIP on your current loan, just give me a call. Hi, thanks for watching, and remember, you can always catch other videos like this on my TriStar Home Loans YouTube channel. And if you haven't already, consider signing up for our TriStar Home Loans email newsletter. We don't inundate you with emails. You'll get an email newsletter typically about twice a month. Until next time, great seeing you all. Stay safe out there. Bye.